Well, good evening, everyone. Hey, it is Shooter Scott Henderson. It is Monday, September 2nd. I think I got that right. At the end of our presentation, please do review our disclosures. Let me jump right into this. Hopefully my voice holds out. I don't know why, but my O2 levels are around 95. So we've been struggling all week, which is one reason I took the extra days. So, all right, let's jump right into it. Just being very candid. I still don't like being long here. Don't. Whenever I don't get the second drives for divergence to the downside, whenever we have a retrace, I never like chasing it long. Now, the downside to that is some of our most significant moves in the last 2 years have occurred without that back test. I realize that back test doesn't always occur. It occurs about 85% of the time. What it does, though, is give you conviction that there's a bottom in. And on top of that, we have just so many outlier events here. AKA they're talking up commercial lending now. It was across the board, started Thursday, whether or not the banks had sufficient reserves to cover the losses. Supposedly $998 billion in loans are supposed to renew at the end of this year in 2024. So we could have, I don't like to be the perma bear here, but when these events just keep coming at us in a repetitive way, it is only a matter of time before we come off. So now last week I was happy just to end flat with, especially with everything that just didn't work. We basically just got chopped up the whole week. Really, it's actually been almost the entire month of August. I think I had one, halfway decent week, not even a great week. But that's the way it is. When you take a setup, the market gives you the trades, you take them, and that's the way it is. So next week, we have PMI on Tuesday, tomorrow, job jobs on Wednesday, Thursday, U.S. ISM services, and then U.S. non-farm payroll. Now, that may or may not move the market. Historically, it's like 1 out of 5 actually moves the market. It'll move bonds, though, typically a little more than that. Now, sort of have a light earnings week. The only thing that really even stood out as something that I may even want to try and chase is PL on Thursday, or maybe DocuSign on Thursday. So I didn't include them in swing trade notes. All right. Now, let me say this. We need market strength. I have no interest in chasing anything long unless we get a bid. So in other words, the opening range, you got 2 opening ranges that I like to look at, the 5-minute opening range and the 30-minute opening range. So I want to break above both those ranges. I want some solid strength before I consider looking at entering anything. But ultimately, I think my primary victim this week are going to be ARM, SMCI, and Tesla. Let me go through that. Now, Merck, I kept it up here because it's a good chart. Shook me out, just with the rough market. I didn't want to hold it. I'm still under the bias, goes a little bit older, and they bought the dip again. So ultimately, I was wrong selling it, should have held it. We got in like 116. So, my original thesis is still there. We still got a strike around 122. So with market strength, Merck is likely to go. I would rather get a back test of this 23.6 and enter right there. But that's my thought. I still like it. All right. Now, ARM. Now, it's a little thin from 131 to 143. But if this market is going to get bid, semis need to go, and ARM is one that has a good look. Just nice grind. Tested the second gap, but didn't fill it. Back tested, didn't come and take out the gap below there. Quite a little bit of strength. Nice solid back test here. So it closes below that 121.88. I wouldn't take any risk. Ultimately, this is just a shot at either 135 or 140 calls in October. Take your pick your poison or both. But I do think that semis have to bounce here to some degree. Now, with that, I'm going to jump down a little bit, and I want to cover SMCI first. Should have had it in order that way because that's how I wanted to do it, but that's the way it is. Now, SMCI, I think, is critical to semis bouncing. So the thesis is this is a 2, intermediate wave 2, which should take us around the 61.8 back to about 540. We just put the first candle in. Piece on, nothing huge, right? Closes below 419.55, you're out. Don't add until we get above that 475, because then you should have some FOMO. It should happen. You look at some of these green candles that we've tried here as far as a bounce. Breath is there for it to give it to us in one day. So be conscious of that. So this is something I'm watching for strength. And, I like it for that swing target towards 517, which is just really 50% back of this leg. It's not the whole leg. Realize because this is an impulse leg lower that says we're coming down to $300. Little bit of a risky trade, but I think we get a bid and just looking at our mound structure, we got a little bit of bouncing around here to do, maybe this kind of bit. So it might be a tad bit early. I'd like one more weekly or one more or two more daily candles in there. So, may push it towards the end of the week, or it may not be till next week if we don't see the volume coming back in. But I think we get a bid. I think we come back after the holiday weekend that everybody's jonesing for a good bid, good trade. So you're going to have a lot of buyers that come into the market, or at least attempt to push the market. All right, let's look at Disney. Nice candle, right? Nice candle on the daily, above 89.67. I'd add little piece on, same thesis. Little piece on, add once it's moving in our direction. Target should be about 93.79. Nice divergence. We had a really nice flush here. That is a flush in RSI. Then we came back in our next low, put in another little divergent lower low. All right, so nice structure here. A little divergence here, even not quite on the second drive is genuine, but it is a lower low in price. So the structure itself says we're pretty close to a bottom. Cap supports it. Its primary wave setup actually down here about 85. A divergent lower low in a structure. The only thing is this could be, this is mound one, this is mound two. We could get a third mound here. So that's another reason I like to just chase the 50% back instead of assuming it's going to go up to 115 and then I'm way off base as far as my strikes. So here I like the October 90s, not a lot of upside on the strike from price. So, it'll be a little thinner, but still I like the look. Better looking chart for this week. Now, Tesla. We got the 100 whatever section of AI up and running, and that is going to be a news pump tomorrow. It is going to be a news pump tomorrow. Question is, does it run us? So I'm only looking for about 225, 226 from where we are to about 213. But realize this, if it's going to run early, this could become a day trade and you could be out. Okay, don't be the hero. You get your 50% back. We already went there once, right? So even a little bit below there, 225, I'm going to start taking some profit. I'm not going to hold too long, probably open these right after the 5-minute opening range is the thought. Regardless of close below 202, I'm out. All right. But to be honest with you, in October, those are going to be pricey. That's going to be an expensive hit if I'm wrong. But I did like the FOMO I saw and the strikes and the calls and how it was a leader there. All right. Now, Charles Schwab, we've had this one in and out. Didn't like it. Got a little bit of a bid. We took our profits here. Been watching this digest. I think I don't like it. It looks more like a flag, right? Still don't have a divergent low, but we do have sort of a triple bottom here. And we're getting a little bit of a bid here. Volume's coming back a little bit. I like a little more volume. So above 65.30 is where I will take a shot. And then I will add at 66.15. And then hopefully I get to my 68 is my thought. So that's what we have for this week, folks. Great trading. Until next time.